What happened in the market through the end of July? Find out next on Tom's Take. You're definitely going to want to watch this one. All the time, every day, realtors get asked, how's the market? What's happening in the market? And I want to give you some real statistics for Philadelphia, Chester, Montgomery, and Delaware counties through the month of July year to date, and then tell you what that means for buyers and for sellers and for the people thinking about making a move, maybe Q4 or the beginning of Q1 in 2022. So here's what we know. The number of sales year to date in those four counties, we know Philadelphia's a city, it's also a county, those four counties, they were up 28.3 to 36.7% in the suburban counties, and they were up 46.6% in the city of Philadelphia. And again, what I will preface here is we're at a time of year in August where we were just coming out of the pandemic last year. We were just able to show homes. Things were ramping up. So this is going to be year over year changes from 2020 to 2021 through the end of July. So sales were up massively. Median sale price is up between 11.8 and 12.7% across the board. Incredible appreciation. Days on market ranged from 20 to 22 year to date in Chester, Delaware, Montgomery counties, and 38 in Philadelphia. And that is down 36% in the suburbs and down 19% in the city from last year's numbers. So it's taking less time for homes to sell. Percentage of the asking price received. These numbers are real. 101 to 102% of the asking price in the suburban counties. So above the asking price on average across the board. And in Philadelphia, it's 97.6%. And that's up 3.1% from last year in the suburbs, 1.3% from last year in Philadelphia. Inventory is ranging in the suburbs of a 0.86 to 0.89 month supply. So less than 9/10 of a month. And it's at a 2.16 month supply in the city of Philadelphia. That's a change and a drop of 38.8% in the suburbs and 11.4% in Philadelphia. So we're seeing that inventory still is a challenge in a lot of places year over year. New listings, again, outpaced pending sales across the board in all four areas. This is the third or fourth time that's happened, so that's a good sign that inventory is bubbling up. And lastly, mortgage rates are coming in just under 3% on a 30-year fixed loan. So if I haven't made your head explode with all these stats, let me tell you my major takeaways here. Number one, if you're a seller and your home is not selling, looking at the average percent of asking price received, you are very clearly not priced right for the market. Homes are selling above the asking price now when priced correctly, and buyers are okay with that. So if you're not getting offers or you're getting offers and they're not what you think you should be getting, it's time to adjust your number. We're seeing that homes on average are selling above the asking price, so you're clearly off by more than 2% in the suburbs. Philadelphia, a little different, same message. What I also know is if you're a buyer right now, you have a huge opportunity to get a below 3% rate on a 30-year fixed loan. We're seeing inventory slightly bubbling up with that continued outpacing of new listings to pending sales. It's not much. It's enough that you're seeing the supply get replaced month over month. So if you can lock in that lower payment, knowing that prices are still appreciating at an incredible rate, 11.8 to 12.7%, you're going to build in basically instant equity. We're almost at a percentage point a month. So that's instant equity at a lower rate than they were 30, 60 days ago. That's an opportunity because we know that buyers buy their home with a monthly payment. And for sellers, what I also see here is inventory is still amazingly low. It's still very low compared to that normal market of a 6-month supply. We're less than a month in the suburbs, just over 2 months in Philadelphia. So what we know is if you're a seller and we're seeing that inventory slowly creeping up, the best time for you to be on the market is when your neighbors aren't. So I'd be trying to take advantage of the suddenly increased buyer affordability at less than 3% on a 30-year fixed, and I'd be looking at trying to catch that low inventory, low competition environment because the buyers are still coming. The buyers are still out there and sales are up dramatically year over year. Part of that's the pandemic, and we're starting to get into a time of year where the pandemic was over when you look at the year-over-year numbers, knowing we were allowed to go show homes in May, figure 60 days on average for a close. Well, we're past that now, getting into the end of July. We're right at that edge point there. So a lot of reasons to transact, and the most important thing here, get professional advice. Get someone who can look at your home, see what's happening locally, on your street, in your neighborhood, in your school district, so that you can understand exactly what's going on and try to take advantage of these conditions rather than just wait on the sidelines and see if it's going to get better. For sellers, they're always looking for it to get better. And a buyer, if it's going to get worse, it's not going to happen. So look at these numbers, take advantage, understand the data, and get some professional advice to make a well-informed decision. Any questions, you need anything, you know where to reach us. Otherwise, we'll be back next week. You're definitely going to want to watch this one.